Okay, I'd like to take this opportunity to welcome everybody to today's event, quarter two earnings sneak preview. You got John Hopkins here, Tom Bowley jumping in just a minute. If you're new to EarningsBeats, we certainly appreciate you taking the time to stop in. Anybody, of course, who's been with us for any period of time, thanks so much for your business and supporting us, some of you over many years. Today's event will be recorded. If for some reason you're not able to stick around, I wouldn't worry about it because you'll get a copy of the recording. You'll be able to listen at your leisure. You notice today's a sneak preview, which is open to any member of the EarningsBeats community, no matter if you're a subscribing member or not. This is to give you a feel for what's going to happen next Monday when we have the actual Q2 earnings session. By then, more companies will have been reported. And next week, the very key tech companies all putting out their numbers. So that's going to be very timely. Hopefully you'll be able to join us for that. That will be a members only event, but you can join with a free trial, 30 days. It costs you nothing. So I would definitely recommend, if you like what you see today, you're not a member, I would strongly suggest signing up, because next week's going to be really full of great information. All right, I know Tom's got a lot to cover, so let's make sure he's around. How's it going, Tom?
Hey, John. Going good. Good afternoon, everybody.
Yeah, a pretty interesting market today. Looking really solid. Then late in the day, everybody said, "Nah, maybe we'll, take some profits and sit in the sideline."
Yeah, I mean, today, anytime we get selling in the last 2 or 3 hours of the day, like we did today, I don't usually feel very good in the near term. I mean, certainly looked like maybe there was some profit taking going on this afternoon. Maybe it was market makers after a big steady rise up, getting close to overhead resistance. But yeah, I'd be a little cautious, looking at that this afternoon. I mean, I certainly have taken necessary precautions personally, just short term. Longer term, I still like the market. I think we bottomed. I think, until proven otherwise, in my retirement account, as I mentioned to members earlier today, I mean, I'm fully invested, and I talked a little bit about that. But in the short term on the trading side, I think you have to be careful when you have a finish like we did today.
All right, I know you got a lot to cover, so I'll step aside and let you take it away.
Okay, sounds good. What we're going to do today is go through and talk about, we've got earnings season starting to kick in. So we've got some key reports coming up this week. A number of banks, the first 2 weeks of earnings season is really skewed toward the banking group. This is a group that can put their numbers out pretty quickly at the end of a quarter. I used to audit banks when I was in public accounting, and they have to be, they are right on top of their numbers, and they have to be for regulatory purposes. So they're generally the first ones to kick off earnings season. You got some other companies, we'll be talking about as well. But a lot of these that we look at today will be banks. I go through and I try to look and see which ones are reporting, or which ones are trending nicely on a relative basis, which ones aren't. And those really are the ones that I'm going to talk a little bit about today. But because there are so many banks, I don't want to keep going over, similarly looking charts. So I want to really spread the wealth here a little bit. So there'll be a lot of banks that you might look at and say, well, what about this one? This one looks good. Or what about this one? Not so good. And it's just because there's so many of them. I don't want to spend the whole, session talking about bank stocks. But there are a lot of stocks that we can talk about. And so I'm going to go ahead and go through those. So I thought what we would do is I'll go through first, talk about some of the stocks that I don't think look very good in terms of their relative strength as they head toward, their actual reports later this week. A couple of these are actually companies that were reporting this week. So I actually have a few that I'll go over that actually already reported. They reported this morning. Some of these also will be reporting this afternoon. Many of them may already have reported. I know the one that I was most interested in, or I thought was going to be really interesting today, was IBM, and whether or not IBM could finally clear that 135 to 145 trading range. It had closed today at 138. It's been up close to 145 recently. Well, initial response does not look that favorable. IBM down about 3% after hours, back to 133. So even though it looks good on its chart, it doesn't look so good in after hours, and still looking for that catalyst. Maybe guidance, maybe there's still something coming up in the conference call that could lift the company, but at least based on the initial reaction, it doesn't look like it's going to be this quarter for IBM. So anyway, we'll go through the weak ones. We'll look at some of the strong stocks, and then just some of the others, a few of the others that maybe didn't look overly, strong or weak, but they're just big names. And so we'll take a look at those charts as well. But as John mentioned, next week is when we're going to have just a ton of companies, because there are going to be so many more earnings getting ready to come out. So many companies, set to report. This week, I think we've got maybe about 150 companies. I haven't looked ahead, but my guess is next week it'll probably be 2 times or maybe even 3 times that. And then the following week, we might have 1,000 companies reporting. So things are really going to pick up. So this is just, as John said, just give you a little taste. If you're new to EarningsBeats, just give you a little taste of what it is that, we do as we get close to earnings season. And next week, we will have a ton of companies to go over, and I will give you some of the companies that I really like, as we move forward. All right. Before we get into any of that, one thing I did want to go over real quick, just because this is a good opportunity for those of you who are EarningsBeats members, and even those of you that aren't. We talk a lot about Max Pain and the fact that, stocks are kind of poised to move in one direction or the other. They're more likely to move in one direction or the other simply based on Max Pain and the way that is set up heading into option expiration Friday. And there were a few really, really good stocks that were provided to our members last week that I'll just go over a couple of those big ones with you to get things started. So let me, give me 1 second here. And let me see if I can get this set up for you. Okay, so first was NVIDIA. Remember, we talked about NVIDIA last week. This would have been Tuesday's candle right here, closing at 150. We actually got a break. We got a drop down to about 146 on the open. Intraday got down to about 145 or so. Look at the move that was made since then. Nearly hit 170 this morning. Max Pain was 171. So from 140 and 145, 146 up to almost 170 earlier today. And that is in 4 trading days. Remember, of the stocks that we looked at, NVIDIA was, I think NVIDIA and AMD were 2 of the stocks that had the most potential upside in terms of percentage moves. Let me show you AMD. So here's AMD opening just below 75 last Wednesday. And then look at what we did from under 75, a high today of 84, $10 on AMD as it headed toward Max Pain, which was $87. Didn't get up there, but remember what we talk about, what we're looking for here is a directional move. And AMD certainly made that directional move. One short that we talked about last week was Moderna. Remember, it was trading up around 174, I think, at the time. We talked about it last Wednesday. I think it got up to maybe 176 intraday. Came all the way down to a low on Thursday of 155.93. Max Pain was 152.30. So I was not into shorting last week. I'm kind of away from shorting right now. but we threw that one out there. Moderna was one potentially that looked like could pull back. And sometimes we talk about this. It's just a normal pullback to the rising 20-day. So from a technical perspective, you really don't think that much of it. But in 3 or 4 days, 176 down to 155, that's a huge move. That's options related, in my opinion. A lot of it's options related. Anyway, those were 3, and I threw out 2 others. One was Freeport-McMoRan, $35 max pain. The stock was trading all the way down to 25 or something. I think it opened last Wednesday at 25 and change. I think it got down to 24 and change on Thursday. Look what it hit today. Hit a high of 28.12. And I wouldn't be surprised to see another strong day in the stock, maybe getting up to the 20-day. That'd be a pretty huge move in a week. Carnival Corp, another one. We talked about the fact that setting new lows, higher PPO, positive divergence, max pain way up here. And for those of you that are not familiar with this and don't understand max pain, essentially when you get a stock that's like this, it's just been going down, 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 you get a lot of in the money puts, and you don't have a whole lot of in the money calls, because anybody that's been buying calls on the way down is underwater. So a lot of times it just behooves market makers to make a move back up and start wiping out some of this put premium. And that's what we're seeing on some of these stocks. You might say, well, it just went up a little bit, didn't get to 13, so it didn't work. Well, if you're buying the stock at 850 and it gets to 10 and you're on the long side, I'd say it worked. Remember, directional move. We're not looking for, a close at max pain. That would be great if it did that, but we're looking for a directional move, and that's what we saw. So anyway, I thought max pain went really well. The stocks that we gave last week, I thought performed really well. All right, so let's talk a little bit about this earnings, Q2 earnings sneak preview. And I'm going to go through and talk about some stocks that I believe could struggle with earnings. Now, one, the banks got it. The banks have been rolling here the last couple of days, or at least early today, they were rolling. Bank of America gapped up, but their relative strength, and I'm going to pull up a chart where we can look at the relative strength a little bit. That's not the one I wanted. All right, so here's Bank of America, and you can see Bank of America going down. And then Bank of America relative to the banks. It peaked all the way back here in February, and it's been trending lower ever since. So I would not have been looking for a great result from Bank of America. They missed their earnings, by the way, but the stock still gapped up because the overall group gapped up. And then Bank of America came right back down. Charles Schwab, another one, does not look particularly good to me. Got the AD line that's been weak. Price action's been weak. And then you go down here, Schwab relative to the investment services just went to a new low today. So gapped up, but then a big sell-off and a new relative low. This dates back all the way probably to September of last year. That was the last time Schwab saw this relative position versus the investment services group. All right, next one up. Let's take a look at SYF. This is Synchrony Financial. AD line here is not too bad. Price action, though, clearly going down. Look at the false breakout right there, pulled back. And SYF on a relative basis, this is what I'm talking about here. Just not performing well versus the consumer finance area. How about Lockheed Martin? This was one I liked for a while. It had moved up, was kind of consolidating. But look at the relative strength over here. It topped about 6-7 weeks ago, And it's now moved down to its lowest level since probably back in January of this year. Look at the action here, breaking back down below these prior lows. So I'd be a little careful, as we get further into this week, some of these companies that are reporting that don't look good technically and don't look good on a relative basis. Chances are, Wall Street knows what's coming. They're the ones able to go out and meet with management before the quarter ends. And then they start positioning their own accounts and their clients' accounts. And the way you see, all the research that they do is by looking at relative strength. Next week stock here is Signature Bank. Obviously going lower here, but look at it relative to the banks. It was at a high over the last 52 weeks. It was a high at the beginning of March. 3 or 4 weeks ago, put in a relative low, still in this downtrend. Not one that I would feel very good about. Abbott Labs. AD line looks good. Price action doesn't though. And on a relative basis, it's been pretty steady for about 8 months. Just straight down relative to the pharmas. All right, ASML, let's move into the semiconductor space. Again, AD line not horrible, but price action continues to be lower. And relative to the semiconductor group, just a week ago was at a 52-week low. So if you're a semiconductor fan, you'd love to see a great report coming out of a company that's not being treated well in that space. But I have my doubts. CCK, Crown Holdings, last 4 months straight down. Relative weakness pretty apparent. This is in the containers and packaging area. All right. XM, this is in software. Software, some of it's been bouncing lately, not XM. Continues to trend lower. AD line's horrible. Look at the relative weakness here. I mean, this stock has gotten no bounce relative to software. Wouldn't be expecting a whole lot coming out of this one. SLG, straight down, AD line down, relative to the industrial and office REITs, new 52-week low. When I see stocks trading like this heading toward their earnings, I do not have very good feelings about how they're going to report. Now, it might be a sell on the rumor, buy on the news. So it could be that these companies react positively, kind of like we saw with Bank of America. The news was bad, but there's been so much bad stuff built into the banks that sometimes you can still get a gap up. But that doesn't mean I would be a buyer. I want to see relative strength. I don't want to own stocks that don't have relative strength. ISRG, Intuitive Surgical. This is in the medical equipment group. Pretty straight down chart. Look at the relative weakness versus medical equipment. All right, COF, also in the consumer finance area, trending down, relative weakness. See, the thing is, I mean, just about everything's trending down. We've been in a cyclical bear market. So prices are going lower. It's just a question of how are you performing relative to your peers. If you're going down, but you're showing relative strength, that at least, I think, gives you some hope. Wall Street, obviously, on a relative basis is moving into that, company showing relative strength. So I would be a little bit more bullish, those companies. But the ones that are showing relative weakness like this, I just wouldn't be expecting a whole lot. Travelers. There you can see price action going down 4 days in a row, 4 months in a row. Relative weakness. I mean, we were down near a 52-week low last week on a relative basis. That's not a good look. Look at the breakdown below these prior lows and look at the volume pickup on that breakdown. Wouldn't be looking for a whole lot of it out of travelers. Snap. AD line continues dropping, price action. I mean, we gapped down. We've had a pretty decent rally off the June low. Snap can't seem to get out of its own way. I mean, maybe we'll have a surprise, a gap up, and we'll leave this down here, this little island cluster. But it certainly doesn't. I'm not seeing anything on this chart that tells me we're going to get good news. Tenet Healthcare, THC. Again, 4 months going straight down. Now, you might look at this and say, well, hey, what about the AD line? Well, if you look at it, the AD line was drifting lower. We basically had one big day, and now it's drifting lower again. One day, I mean, I want to see it consistently bought. We had one big volume day right here, and we closed on the high. And if you know anything about the AD line, the volume, you know, if you close right on the high, all of the volume is added. Well, that was a massive day in terms of volume. So we had this huge move up, but I'm not seeing consistent accumulation on this stock. I'm actually seeing the opposite of that. So even though the AD line made this huge spike, I think you still have to kind of use some common sense. You know, I don't know what happened that day. Obviously, there was news out. I don't know. I'd have to go back and look, but I want to see consistently, you know, the AD line moving higher. Look at the relative weakness, just straight down. All right, Boston Beer. Price action going down. Look at the relative weakness. I mean, just almost no pop whatsoever. Just hard to get excited about a company like that as they head into earnings. HRI, Herc Holdings. You can see right here, price action down. 52-week relative low right there toward the end of June. A little bit of movement off the bottom, but still overall downtrend in play, relative downtrend. American Express. Price action breaking down to 52-week lows recently. Some of the market's been rebounding, not at AXP, with the relative weakness. I don't know. Maybe they're going to have some dirty laundry. HCA Healthcare. Big breakdown right there with heavy volume. And we've just continued moving lower. Relative weakness is awful. So if you're looking for a healthcare provider, I don't know that HCA would be the one I'd be looking for. So of all the companies reporting this week, those were some that stood out to me that I thought were weak. We'll see how they report. We'll see what kind of reactions we get. I'm not really into shorting at this point. As I mentioned earlier, I think the market bottomed. So if I'm a little nervous, I'll just be in cash. I'm not really looking to short anything. So the stocks that I'd be much more interested in trading are going to be the ones I'm ready to go over now. These are the stronger stocks. These are ones that have shown relative strength and could, provide some nice movement as we go forward. Especially sometimes you get the buy on rumor, sell on news. So some of these companies going up, they report decent results, but the market sells off anyway. Well, a lot of times that can give you an opportunity to get in. So not all of these you're going to get great reactions. Not all of these are going to go up after earnings because Wall Street anticipates good earnings. And then once the earnings come out, a lot of times, sometimes you'll get a gap up and you get this big black candle or a red bearish engulfing candle because the news comes out and you get that final gap and then that's it. So these are stocks I like, but it doesn't mean I would be jumping into all of them right before their earnings report or even right after their earnings report. I want to try to find them and buy them off of some key support levels. So if I've got a strong stock, it reports great results, gaps up, and then a week or two later pulls back and tests the 20-day, that might be the time I jump on it. So these are stocks I want to be aware of. I want to see how they report, see how the market reacts, and then think about a strategy to get into them. So the first one, I already mentioned this one, IBM. This is one I was really anticipating, the reaction today. And IBM going higher. I mean, in a market, we've been in a cyclical bear market. You wouldn't know it looking at IBM's chart. A month ago, we were at a 52-week high. And there's that 145 level. If I show you the long-term chart here's a monthly 15-year chart. Look at the high established all the way back in 2013, 9 years ago, 145. 135, 135, 135, close to 135, close to 135, 135, 135. Now we're up in the 140s. 9-10 years of this. So closing today at 138, what I was hoping from a bullish perspective is that IBM would gap up above 145. That would have been great. Well, let's get the latest on it here. 133, it's down 488 after hours, down 3.5%. So right now, what it's looking like is just one more failed attempt at a breakout. That's not good. All right, ELS. Now this one, you can see price is going down. This might look just like some of the others. What's the difference? I mean, price action has been trending lower. Well, look at the relative strength here. That's the difference. If you're just looking at price action, maybe you don't see anything different, trending lower. But Wall Street, for whatever reason, is liking this stock relative to many of its real estate peers. Will that matter when earnings come out? I don't know. It's going to be an interesting call. Now, with this kind of relative strength, if they come out and they beat top and bottom line, and the stock goes back down and tests this double bottom again, I would consider buying it. Something down around 68. Maybe they report great results, gap up to 78, going this way. Then I would wait and see maybe if I get a pullback to gap support or the rising 20-day. But these are stocks I would be interested in trading if they report strong results like the charts are anticipating, and then hit good key support somewhere. That's what I would be looking for. All right, FBK. This is one of the banks. I mean, it's been going down, but look at the relative strength. Nice outperformance relative to its banking peers. It's been holding on to these recent lows. When you look at the bank index isn't holding on to any lows. Bank index just set a new low at the end of last week. But you look at a stock like FBK and it's holding support. All right, Cal-Maine Foods. Big move up on its chart. This was great action. Look at all the volume coming in those first 3 months. Pulled back for a while, but it's starting to strengthen again. Look at the relative strength building. I wouldn't be surprised to see another nice report here. ELV, this is Elevance Health. AD line strong. Relative strength, 52-week high right about the end of May. It's pulled back a little bit while it's been consolidating, but I wouldn't be surprised to see the stock moving higher. I really like the combination of a strong AD line and uptrending relative strength throughout the last year. CCI, Crown Castle. Now this one, when you look at the relative strength, it had been going down. Now all of a sudden, it comes back up here at the end. The AD line strengthening. This one isn't as strong as some of the others. But off of this uptrend, I actually was looking at these equal highs rising lows, almost all hollow candles. I don't know if it breaks out above 175, gets a strong report. This is just one maybe it's a wild card. M&T Bank. I mean, honestly, this is one of the better banks out there. The AD line doesn't really show it, but the price action going sideways, coming off a high in January and really just going sideways while the overall bank index just keeps going lower. Look at the relative strength. That's been consistent almost all year. So don't be surprised to see a better than expected report out of M&T Bank. NTRS, AD line's okay. Price action's been going down, but look at the relative strength. It's near a 52-week relative high right now versus its asset manager peers. Steel Dynamics. It's been coming down, but the overall steel group really has come down. STLD relative to its peers is actually holding up near a 52-week high. Now, if STLD comes out with bad results and it's one of the best in the space, then you would want to be careful with anything else in the space. CMA, another one of the strong banks. Yes, it's been declining, but on a relative basis, it was very steady all the way up until April, pulled back, but now it's made another run here recently on a relative basis. So I think CMA looks like I would expect a decent report there. LAD in the auto area, or no, excuse me, this is in the specialty retail group. It's been downtrending, but look at the AD line setting new highs and look at the relative strength. I mean, from the beginning of the year or even back beginning of December through the middle part of May, very strong relative strength. We've pulled back a little bit, but I still think this is one I'd be expecting a good report out of. KNX, Knight Swift Transportation. Mostly just sideways, doesn't really look like much here until you look at the relative strength. Just set a new 52-week high relative to the truckers. So if you're wondering, about the truckers going forward, well, this is one of your leaders. So you might want to pay attention to see how their earnings report comes out. All right, SEI, I think that's supposed to be SEIC. Let me see here. Yeah, there's the relative strength. SEIC versus the asset manager peers, very, very strong. So again, you look at the absolute price chart. If you're not looking at relative strength and you're just looking at the price chart, it doesn't really look very compelling. But when you throw on that relative strength along with the rising AD line, that tells a little bit different picture. Be interesting to see how this one reports. BANR, this is Banner Corp, also in the banking area. Went down first few months of the year, been going sideways lately. Look at the relative strength. Very nice. Tractor Supply, AD line, very strong. Price action down, now it's back up, just kind of going sideways here. Versus specialty retail though. Tractor Supply, very strong. Huntington Bancorp, HBAN, another one. Price action's going down. Relative strength's been going up. WRB, this is one of our portfolio stocks. AD line still looks good. Price action looks like it's starting to roll over here a little bit. Not really a lot of volume though on the breakdown. Below about $64, $65. That, if it had come with huge volume, 3 million shares, even 2.5 million shares or more, it was under 2 million, probably closer to about 1.6 million. Gap down, but look at the relative strength. It's been straight up for about 10 months. And then just recently, we saw a little bit of relative profit taking. But I wouldn't be surprised to see a better report or a strong report out. Snap-on, SNA. Again, you look at price action, there's nothing compelling here whatsoever. Breakdown below these prior lows, trading below that 20-day moving average, but AD line rising, relative strength right now near a 52-week relative high versus the industrial suppliers. AutoNation, sideways action, AD line strengthening, relative price action soared back in April and May during this move up. And that's where a lot of the volume came in. I think right now we're just kind of sideways consolidating. I think it's going to be interesting to see how AutoNation comes out with their report. I wouldn't be surprised to see a better than expected number. Sunoco products. So this is in the containers and packaging area. Again, how does this look? This doesn't look very good. 52-week relative high, though, versus its peers. So a lot of the problem, the reason it's coming down is the peers. This group is just, Wall Street's not really interested in the group. But if you're looking within the group, you've got a leader here. So once again, if this group has any hope, probably a lot of it is pinned on Sunoco. TCBI. There's your AD line rising. Again, not great price action. This is in the banking area. Look at the relative strength. Last week, 52-week relative high. AIR, this is AAR Corp. So now we're into aerospace. AD line remains pretty strong. We pulled back, not really looking very good here, but we had seen a tremendous amount of relative strength up until last month. But with heavy volume, the AD line ended up turning right back around to the upside. So I would say this is another one of those wild cards. Price action moving down lately. The relative strength moving down lately. If we lose these lows, I would probably say be done with it. But if that holds and we get a decent report, I could see this one going back up to its recent highs. Regions Financial. Again, in the banking area, AD line at about a 4-month high right now. Price action going down, relative strength going up. So it's subtle, but the money that's going into banking, Regions is getting more than its fair share, and it's outperforming its peers, even though it's trending lower. So I'd be interested to see how this company reports. Last one I have for you on the strong stocks, GNTX. Gentex going down, AD line near a 52-week high, and look at the price action versus auto parts. So the group has been awful, and that's what's taken the stock down. But on a relative basis, it's one of the leaders within the space, and it appears to be pretty decent accumulation on all of this selling. All right. The last three I'm going to give you are just three that you might be interested in, given their name and stature and so forth. One is Danaher Corp, which long-term has been a great company. I'm looking at the AD line, which really for the last year, not much movement one way or the other. Been drifting lower in price. Relative strength has been picking up the last couple of months. So maybe we get a big number and we can break back up above that high. I think 273, right around that level, is the big level of resistance. So until we can get through that, I would be treating this low down around 234 and this high as the trading range. So if we get a good report and DHR goes down, test that 234 level, might not be a bad entry. Tight stop. Netflix reports this week. AD line has started to turn back around, but price action really hasn't. Relative strength has just started to turn up a little, but that's after a huge relative drop back with all this volume and selling. I'm still not seeing a whole lot positive out of this stock yet. I wouldn't want to be owned. I would not want to be holding the stock into earnings. I mean, maybe it's going to turn the corner and maybe it's going to do another one of these gap downs where you gap down, go sideways, gap down, go sideways. Maybe we're going to get another one. Last one I have for you tonight, we're going to wrap up, is Tesla. Tesla will be reporting AD line starting to turn back up again. We've been going sideways here over the last 6 to 8 weeks. Relative strength has been building a little bit. Just don't know if it's enough yet on Tesla. This is a company that I love going forward. If you ask me what stock, name one stock that you would be comfortable holding for 5 years, not able to sell it, you have to hold it. Tesla would be on my short list. It would be up there with Apple and Microsoft and a couple others, but I really like the company. I want to see it. I want to see it post big numbers, gap up, really start to turn this trend around, and then on a pullback, buy it. But right now, I think it's just a little bit too early. Again, long-term, I'm fine buying it here. I think it'll be a great investment. It's my opinion. Short-term, could it go back to 650, 630? Yes, it could. Could go below that. I'm still not seeing a whole lot of great action here. So anyway, that's what I had. I don't know if we have questions, John, but I'll be happy to take those. And
Okay.
remember, this
couple questions. What's that?
Go ahead.
Yeah. Somebody said, you mentioned IBM, they pulled back. What would be a level you would consider buying a pullback?
Well, I didn't see how they reported. Did they beat? I don't know.
They beat and
top and bottom.
Yeah.
Then I'd like the stock probably back down. I mean, let's see where it opens tomorrow. If it opens below this low, then I think that gap support level, if it were to trade back down to 127.50, I would take a shot. If they beat on top and bottom line and they got down to 127.50, I'd be a buyer.
Okay. More of a general question. Do you ever buy individual stocks for your long-term holdings, or do you just buy the Q SPYs? And what about selling covered calls on them?
I don't sell any covered calls. I don't get into options anymore. I don't have the right mindset for it. I'll just be honest. I mean, you have to understand what your strengths and weaknesses are. I tend to be pretty aggressive trader. And so I used options for leverage back in the day, and it did me really well sometimes. And I took some big losses sometimes. And so I just never got comfortable with, it was like something I needed to get rid of in my own personal trading. Now, I know some people that are great technicians and are really good about risk management with options. I think they can be a great strategy. I just know that they weren't right for me. So I don't do any options, even covered calls, which actually is a little bit safer. That's just too safe for me. If I think the market's going up, I'm not going to, buy calls or buy the stock and sell calls against it. I would buy the stock and buy calls if it were me, because I'm not going to hedge. If I believe that the market's going higher, I'm going to be long. If I think the market's going lower, I'm pretty much going to try to be in cash. As far as QQQ versus individual stocks, normally I'm an individual stock person. I like to trade stocks because I think I can do better than the averages. When we're coming off a bottom, like I think we are right now, things can get really wonky in terms of rotation. And so I might be right. The market might go up and I might simply be in the wrong stocks. And I'll give you a perfect example, because I just took a loss on Zoom recently. Loved Zoom. Market rebounded, Zoom went down. So, I actually was trading the QLD and did really well with it. But the amount of money I put into Zoom, I lost. So it's just one of those things. Hold on one second. I feel like I'm losing my voice. I'm not sure what's going on, but anyway, yeah, I just, for me, I like doing the leveraged ETFs or even just the plain ETFs when we're coming off of market bottom. And then once we get into a more defined uptrend and we get more defined leadership, then I will switch much more to individual stocks.
All right, a couple more wrap up. I think this could be from somebody new because you've covered it so much lately. And we don't have time to spend on your entire thesis, but what is your view on bear market versus bull market, and what are we in right now?
I think we're in a secular bull market. I think we spent the first 6 months in a cyclical bear market within a secular bull market. And I think the cyclical bear market ended at the June low. So I think we are in the process, and bottoming can be a process. It may not, you don't always get a V bottom and go straight back up. We may go sideways this summer. I'm not quite sure how it's going to play out. I wish I knew for sure, but I like that June bottom being the low. And if we go back down below that June low, I'm going to look at my sustainability ratios that I like to follow. If they go lower, then I'm going to call off having made that bottom. I'm not calling it off. I'll just say, hey, it was not the right call. But based on what I'm seeing, I can only call what I see based on the charts. And based on what I see and what I have seen over the course of the last month or two, I think bottom's in, and I think the market's going higher in time. I think we're going to resume our secular bull market. And if we do go down one more time this summer, I still believe the fourth quarter, we're going to explode to the upside.
All right, well then based on that, well, let's end on this one. What's your opinion about investing for long-term in ARK funds such as ARKK, ARKJ, and ARKQ?
Yeah, I love the ARK funds. I mean, I just like what they do. They're into growth. They're into high growth. I think over time, because I believe we're in a secular bull market, growth does better than value. Always does in secular bull markets. So I like the strategy long-term, but it still comes down to each individual. I mean, if you're somebody who can't afford to lose capital, what if I'm wrong and this isn't a secular bull market? There are some people believe we're in a secular bear. If they happen to be right and the market goes back down and you're fully invested in the ARK funds, you're going to get clobbered. So can you take that risk? That, everybody's got to make that decision on their own. If you asked me, 5 years from now, and I've got a decision to make right now, what do I want to own, growth or value? I would pick growth. I mean, you can own both, but I would be skewed toward growth. I personally like to just I tend to be much more aggressive. I like to be a growth investor in an uptrending market. So I would say growth. I like what Cathie Wood has done over at ARK. The only thing I don't like is that when things, started getting a lot cloudier and money was rotating heavily away from growth and into value, she didn't make any changes. I mean, our portfolios haven't done well, but I can tell you our portfolios have killed the ARK funds. They wouldn't have if we had stayed in growth, but we started adjusting them. So we may not have kept up with the S&P 500, but we didn't take those massive losses that ARK funds took. So the only thing I would have to say negative about the ARK funds and Cathie Wood is I just don't think they changed their strategy. And one of the things we've been saying all year is that you can't treat this market, or at least the first 6 months of this year, you can't treat it like we've been treating the last 2 years. Different. And they didn't change anything. They just kept buying more and more of the same stuff, which I never understood. So I think she wasted a lot of her, investors' money by sticking to all those growth stocks for so long. But I think in the end, I think she'll be proven correct. I think growth stocks will win out. And I think those funds will come back strong.
Okay, I think it's time to wrap up. And any last words? I'll let you go ahead and close it up.
Yeah, I mean, I went through pretty quickly a number of stocks. I don't know how many I went through, maybe 30. Next week will be this on steroids, and it'll be a lot more diverse group, a lot more software companies, semiconductors, that we'll be looking at. So for those of you that are new to EarningsBeats, this would be a good time to take out a 30-day trial, which is free. And then you can join us not only for that event next week, but we got another big one tomorrow, our ETF draft, model ETF portfolio draft, which is crushing the S&P 500 right now. We'll be having our draft tomorrow night to fill out our model ETF portfolio for the next 90 days. And that's a members only event. So anyway, tonight's a great night to join us. Check us out for 30 days. And hey, if you don't like it, it's fine with me. I've always said, if you don't like our service, or if it doesn't work for you, it's not going to work for everyone. If it doesn't work for you, no harm. Cost you zero. Anyway, that's it for me. We'll do this again next week. We'll do the Q2 earnings event, and we'll have a whole lot more stocks to go through for sure. So take care, everybody. Have a great evening, and we'll get together again soon. Happy trading.